In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto. Question everything, trust nothing. It's your boys, CryptoKeeper and BlockchainCrusader. And as you can see, we have got the TA Mafia in the house. Actually, before the stream started, we realized that 4 of the 5 people in here have a hard part. So we are officially the hard part Mafia. We can't see Frankie's. He's hiding under the hat. But gentlemen, Gareth, Frankie, CVO, how we doing?
Good, man. As good as we can be with what's going on out there right now.
Yeah. Absolute craziness. But hey, that's why you could short the market, right?
Right.
Well, we're about to find out which way we're headed. That is why we have the experts on the panel tonight. Guys, make sure if you are in the chat that you obviously like the stream, share it out to some people. Let's get a ton of people in here. Let's have some fun tonight. Make sure that you join the Discord. We have got Danger Close Alpha rocking and rolling. That is our NFT project. If you're not familiar with it, now you are. Jump into the Discord and then follow us on Twitter. We got a couple Twitter pages. We got all sorts of socials going on. We really appreciate all the support. Right before this, we've been talking about it for a little while now. We got Frankie Candles over on BitBoy Crypto. He's in the show tonight, so he just morphed over from one show to the next. So we're happy that he's here. And then, as always, CVO's here for TA Thursdays. And then Gareth coming in clutch tonight. Have some fun. We're going to rock it around the horn and figure out what's going on with the markets. So without further ado, let's just take a quick peek.
Take the quick peek at this disaster.
A quick peek. Yeah, okay. A quick peek. Let's just see. Let's update this. What do we got going on here? Oh, disaster, Miguel, you say. We're talking about I see some green on the Bitcoin chart.
Well, I mean, Bitcoin did drop to 25. We're up to 28. So that's a huge recovery in of itself right there.
That is a fair, valid point. We're at $1.22 trillion with a T. Folks, we still have the T on there, so we're still in the trillions. So I guess that is one bright thing we could look at. Down 3.03%. Bitcoin down at 28.9, or actually up to 28.9. ETH under 2K. Hurt me, but that could be possibly a good buying opportunity. We've got, I would normally just skip over Tether and USDC, but we're going to dive into that a little bit tonight. Should we be skipping over these stable coins? I think some of you have seen, maybe not so much. And then running down the rest of the crew, down 6, 7, 8, 10%. The market is getting slaughtered. Let's look at these weeklies real quick.
Dude, the weeklies, 30s, 40s, are
20,
slaughterhouse.
29, 28, 36, 40.51, 48.11, and 36.55. So if anyone tells me this week they have been absolutely killing it, the only way that's happening is maybe in the chat, or not in the chat, in the panel tonight. We might have some people killing it with some trades. So let's talk about it. Let's kick it off. So Frankie, it's your first time on the channel. Thank you for being here, brother. That's what Miguel and I want to know. What the heck happened? What's going on?
Yeah. So listen, I'll be honest. That's why I'm actually very interested to hear what Gareth has to say, because I know Gareth has been around. He's been doing this for a while. I know he knows his stuff. And I don't know. Last time someone told me, because I know Gareth's on around the blockchain a lot, and DZ tells me, anytime someone that does TA comes on, he's like, hey, what do you think? They said this. And last time he was saying, I think Gareth's targets are much lower than mine. I'm very interested to see, what his thought process is, because I basically subscribe. I think that there's a chance we can bottom out somewhat quickly here in the low to mid 20s, between 25 and maybe 21, maybe even 20K. I can see maybe some wicks bringing us down a little lower, but I know a lot of people have much lower targets. I've heard 10K. I've heard even lower than that. And with the things going on right now with UST, I don't think it's impossible to come down that low. Now, a little while ago, I might have thought it was a little more unlikely, but now with this stuff happening, with Bitcoin hitting about 25,350 in that area last night, or I think it was in the early morning today, with that happening so fast, we are hitting these targets a lot faster than I thought. And I'm just over here trying to, weigh, does this mean that we're going to, kind of just rip the Band-Aid off and bottom out quickly? Or is this indicating that there's just a lot more pain ahead? We did hit a macro golden pocket around, in the 28, 29, 28, 26K area, that range. We did get a little bit of a bounce. I can show my chart at some point if that's possible, but
Yeah.
we did get a little bounce.
You can share your screen. You can share your screen, brother, just right up underneath, just so you know when you are ready. Right up underneath, there's the
here
share
we go.
screen.
Share
So whenever you want
screen.
to, you're totally good with that, brother, for sure.
Boom. Okay. Oh, there it is. Okay, beautiful. Okay, so this is the golden pocket. This gold box is kind of what we're looking at for a bounce. I have been waiting for price to come down here and looking for basically, I was in some pretty good shorts. Maybe while someone else is talking, I can pull those trades up and we can come back and check in on them. But I was waiting for price to come down to this golden pocket, looking for some bullish divergences on the higher hourly time frames or medium hourly time frames to get a little bounce up, and we have seen it. Right, we came down, wicked down to about that 25.3 area, and we've come back up to the top of this golden pocket. We put in these bullish divergences, making lower lows on price with the higher lows on market cipher B. You could also do this with the RSI if you don't have market cipher B. But we did get this little bounce. It's we do have the 4-hour VWAP. If you guys can't tell, I do use market cipher. I use a mixture between market cipher and traditional TA. But 4-hour, you have the VWAP coming towards that 0 line. If we get this to cross over to the downside, I think there is a chance we could reject off the top of this golden pocket and come down further, which would be disappointing because we've been waiting for this bounce. And if this is the apex of the bounce, then it's a little bit of a disappointing bounce in my opinion. But for my lower targets for Bitcoin as of right now, like I said, I mid to low 20s. But I'm not one of those people. I like to be completely non-deterministic in my TA. I think people who just subscribe too hard, like I think we're a lot of people are like, there's no way we're going below 20K, and they just stick to that. And I just feel like that's counterproductive, especially in a market like crypto. I mean, you can't, this thing can do anything, and you have to understand that. So I like to be non-deterministic. I do subscribe to the mid to low 20s as the bottom, but I don't think it's impossible to go lower. Some things real quick that kind of point to that number. There's a lot of things, but I was just kind of looking at this before we hopped on here. If you come back to these previous cycles, if I go to the weekly chart, there we go. Okay, so if you come all the way back, let me just turn, there we go. What is this? This is 2017. If you come all the way back, let me open my other Bitstamp chart so I have a little more price history here. So if you come all the way back to 2013, right? And I have the 50 period moving average or the 50-week moving average here. Now, typically, if you measure these down, right, from the moment that you pierce this 50 moving average, if you measure from, about where you crack that line to the bottom, this is 2014, we came down about 70%, give or take, about 70%, right? And then moving forward to the 2017 bull run, 2018 bear market, if you go ahead and measure that same thing from right where you crack that 50 period moving average, if you go ahead and measure that, it comes to about, let me just get about 60%, right? So 10% less than the previous run. If we see something similar happen, we would be expecting, not that history has to repeat itself, but you could take it into consideration. If we see something, say, with diminished returns, the price action gets a little less volatile over time as the market matures. Let's say we'll take another 10% off and expect a 50% move to the downside. Where would that?
Are we there yet? Are we there yet?
We're pretty dang close. It brings us to about 23K, right? 23.7, that mid to low $20,000 area. And I don't want to bore you guys. We don't have all the time in the world here, but there's a lot of things that just point to this number. If that's assuming history will at least rhyme a little bit. Obviously we can see anything happen, and like I said, I'm open to prices lower than that, especially with these black swan with Luna happening. I think that could definitely affect it, and I'm definitely interested to hear what the rest of you guys have to say.
Yeah, for sure. So you're thinking we hang out. We're down around the low 20s, but we're not going to be there for that long. I'm interested to hear what. So CBO. Where are you thinking we're bottoming out ish?
Bottoming is hard thing to pick here, but
come on, we brought you on to call the bottom. This is what we have you on here
and you
for.
can't take it back.
I know, that's right. Make the decision. Let's hear it.
All right. I just shared my screen here, and so the last time we were on, actually the last time it was Gareth and I a couple weeks back, we were discussing this exact scenario, right, of coming down and taking these lows here pretty much and erasing everything from the last basically 15 months. And so here we are. One of the things that we also talked about was that macro golden pocket that Frankie was just talking about, which is essentially right that 28 to 26,000, right? Essentially this area that we kind of came into. The one thing I hated about this golden pocket is that it was a very, very popular target for everybody. So
30.
What's that?
Was it like 30?
No, it's it's 20. Okay. Like it's just like a little bit below 29, and then 226.8 ish, right? So one of the things that we were looking at was that you possibly get a front run, right, to kind of like catch everybody a little bit off guard, or you're going to melt right through it, and that's kind of one of the two things that I'd be anticipating. I know we're kind of hovering and holding this right now. It really is just kind of a wait and see kind of deal. A lot of people are looking at the daily daily bullish divergence now that's popping up, right, as we're making this lower low on the price action. You got the higher low coming in on the RSI. This can, however, totally pull one of these, right, and still put in, a little bit of a higher RSI over the next couple of days here. We saw the same thing back here as we trended, over the course of another couple of months here. So something to be aware of there. The targets to the downside now that are relevant to me, which just kind of going on, right? Like it's one of those things where, not to get too wrapped up in the 20K area, but I gotta say at this point, there's a lot of confluence that does make sense there. And the one thing, especially when we were a lot higher and everybody was really not for that target area, was that we never came back to that in the previous bull runs and this and that. Granted, we only have like 12 years of history here, so there's definitely an option for the first time for everything. The next area that I'd be looking for personally, if we don't hold this golden pocket, which just seems pretty likely, although we may get a bounce here short term, I think everybody could maybe agree to that, right? But it's just looking at this would be the CME futures gap, right? That's the next one we're looking at, and taking a look at this, kind of pierced through it today a little bit. But it does come all the way back down towards about that $24,000 region, kind of lines up with Frankie's 23K area. But if you will pay, note that the next one right below it is at about $18,000 to $19,000. The other things about the 20K area for me that are lining up right, and once again, we are in a huge bounce area right now. So it's not to say that this couldn't be the area we kind of, bounce out of here from. We just haven't seen any of that quite yet, right? So. But the biggest thing too is like looking back at this, we were looking at the last time, right? We were looking for that macro, range low to kind of come in and hold. And, some of those, sometimes you really have to wait to see what the reaction is when you get to some of these levels. And when we got to there, I think we were talking to Nick and Miguel here, right? We were looking at it, they 31,200 and it just melted right through it, Yeah. So it's definitely, a warning shot fired that
I got hit on it. It hit me hard.
It was a tough one.
I'm sure everybody got hit on that
one. So towards that, once again, kind of looking at that 20K area, is that obviously it's the previous all-time high, which I think holds a lot of weight. Gareth has a lot of backing on that as well. You got that CME futures gap down there as well that we just looked at right there. And then a couple of volume targets that I want to bring up here right now. This is really all credit to my partner in the group, Magic Internet Money, for bringing these up. But he brought these to our attention in like Christmas Eve when we first joined up back in December, and we were trading at $52,000. And ever since then, this has been like a major target area for us. The doomsday box here, right, was kind of our make our way down. This was our, if we didn't stop at this NPOC up here at 32K, obviously we made it through there. Now we're looking at that CME futures gap. And if that really doesn't hold, then the 20K area does have a lot of confluence there, right? One of which just being, like I said, that CME futures gap, obviously is the previous all-time high. You also have a quarterly NPOC there. So this is a high time frame volume target down here that did not get back tested. This is at 19,228. this is a very, very big target. And with us being this close, you know how we talk about these volume targets, these are like magnets to the price, especially when we come into this region. So that's one thing to note right there. And then as well as that, you have, an untapped yearly pivot. So dating back to all of history so far for Bitcoin, the average price of Bitcoin for the year, we've never left a yearly pivot untapped, and the only one that we had left is so
drop the heat, man. Drop the heat.
Just so happens to be right at 20,700. It's actually 20,600, I believe, but in that region. So this whole area has just got a lot of confluence in this region, right? So you got the CME futures gap, you got the previous all-time high.
And you said that there hasn't been a single yearly pivot that has not been tapped.
Only one. And a perfect example of this, granted, we had tapped it several times here, but this was our the yearly pivot from this year that we danced around for quite some time, came back. You see how we respected it here, and then that's when we actually took down from there. The untapped yearly pivot is very interesting to me, though, because this morning we were looking at a couple weeks back on here. I don't really chart the the S&P or the stock market or anything like that, but we did throw together a S&P 500 chart really quickly on the last this was probably back in January at this point. So I just threw up, just these levels for the time that we were looking at it. And I looked at it again today. We actually came down to this quarterly key level. Right now we're having some support at this quarterly point of control. So once again, major high time frame volume target right here. But looking back at this too, I kind of back tested this. There is actually only one other time where the S&P had an untapped yearly pivot in the last 20 years. And we came really close, but we left one as well right here. And that's about $3,200, which would probably line up if we see Bitcoin reaching 20K, it's probably going to line up with the S&P coming down to this $3,200 region.
God, that would be absolutely that would be absolutely getting decimated.
We're getting nuked out here, dude. Holy smokes.
Let me ask. So you brought up the S&P, so I want to ask Gareth, because Gareth, you've got a lot of history with the stock market. I guess two things. One, we're always trying to teach in the group. So for anybody that's in here that is a little bit newer, CVO was just touching on something that I think is really important, and he was talking about the CME futures gap. So can you give just a brief, quick explanation of what a CME futures gap is and how you believe currently the S&P is correlated and kind of where you think you see things headed right now?
Yeah, so gaps are created, and it's interesting because crypto really takes that trade away. But historically, technical traders love gaps. Gaps will be like a stock closes today at 4 p.m. when the stock market closes, and it opens tomorrow at a totally different price. So let's say it closes today at $20, tomorrow it opens at 25. If you ever fill that level back to 20, that's considered a gap fill, and it's a technical support area. Okay. In that situation. So I think that's a really important thing to pay attention to, especially since there's so much big money trading the futures on Bitcoin and on the S&P as well. And then the correlation is just, it's risk on, risk off, right? Crypto is really the riskiest asset out there. At least it's considered to be, even though a lot of people want to believe that Bitcoin is going to be kind of that stable kind of goldish digital gold. Right now, it's an infant, right? I think it's always important to recognize that Bitcoin is a 13-year-old. How many 13-year-olds do we know that are stable, right? It's just so think about it in that context. And then you look at gold, which barely moves up or down 1% a day, but it's been used as a store of safety for thousands of years, right? So Bitcoin, I think, eventually gets there. It's just young right now. It's a new asset. So yeah, I think it's super, super interesting.
So Gareth, I wanted to ask you, what I really wanted to ask you was, when do I start longing Terra Luna? When should I go long? Should I wait a little bit more for it to drop, or what are we seeing here for Terra Luna?
So it's one of those things now where I won't even trade it. Now I did get caught in it. I'll admit it. I picked up some when it was like trading in the 30s. As a technician, it hit some key supports, and I was like, all right. And one of the things that technicians do, they turn off their emotional brain, and that's usually great. 99 out of 110 times, that's amazing to do, because you don't get caught in the emotional sway of the markets, right? So you end up doing the right thing. In these type of situations where there's just some sort of breakage, you actually do get caught in it. The way you mitigate that as a trader is to make sure that the percentage you're putting in is not a big percentage, right? So I did 5% of my portfolio, basically 5% down right there, right? I mean, that's just the basics of it. Luckily, I've been accumulating, and I'll just talk about it now, is that I have been buying Bitcoin down here, Ethereum, Solana, a little Cardano.
Let's
So I've
go.
been accumulating down here because I do expect a technical bounce. Now, overall, I still see crypto going lower, but we are extremely oversold. It's a huge amount of wall of worry right now about what's going on with UST. And I do think we hit some major technicals. In fact, let me take a look at the chart here. We'll bring up
Gareth,
the chart.
are you accumulating for the short term, or you're saying your long-term HODL portfolio you're accumulating?
Just short term.
Okay.
Just short term. Yeah. Yeah. So basically this is what I would consider a swing trade. Swing trades by nature are days to weeks, maybe a month or two, but they're not long term, which I'd consider anything over a year, like a long-term capital gain type thing. So last time I was on, we talked about this channel, right? And this channel, when you look at this drop, right, this was a classic bear pattern. And I think even last time I was on, I said, listen, if you looked at 100 of the same pattern on different charts, 80 of them or 80% would break to the downside. And that's exactly what we did, right? So the probabilities at trading technically is all about probabilities. Doesn't guarantee you results, but it puts at least the odds in your favor. Now, as we've come down here, this is where things get a little interesting, because now what I want to do is check this out, is I want to get rid of this, because this is old now. This channel is old. It's done. I mean, we may go back and retest the lower end of it, but what I found is really interesting and why I've been accumulating here is if you take a look at this channel, there's a new channel I found, and basically notice how I'm connecting these highs here. All right. And then what I want to do is drop that straight down and then look at what you get, right? So basically, if we look at the chart, let me just bring up my drawing tool. So you had a hit up here. It kind of touched here before it broke. It touched right there. Then we broke down. Then we touched it here and here. And then on the downside, you have this area, this area, this area, and then look at right down here. We just pierced that lower end. So what I'm thinking is that, you have outliers up here. This was an outlier move. And then you had an outlier down here, right? So one on either side. Doesn't mean we can't have another one, of course, but I'm at least thinking the probabilities based on how oversold we are, we're due for some sort of retrace back here, maybe to 33,000, maybe 35, somewhere in that vicinity. So I think that's interesting to note. And that's why I've been going long some of these coins here. The only other thing I would just mention is my target. So my upper end target is 20,000. I think we've discussed that in the past. My low end is 12,000, and I want to tell you guys why I see that as a possibility. So 20 is just the obvious taking us back to the 2017 highs. There's going to be massive support there. It makes sense from the perspective. Now, a lot of people, like you guys mentioned, have said, well, we've never retested a previous high in any other Bitcoin cycle. But the problem with that is then in a previous bear market, we've always gone 80 to 85% lower. So one of these has to fail, right? So you're either not going to go down 80, 85%, or you're going to blow right through that previous 2017 high, or at least touch it. So at least in the very least, I would say that would be your upper range target around 20,000. My low end is kind of cool because it meshes on multiple levels, right? So
it's only cool if you have a lot of money ready to buy it up. That's the only way it's cool, Gareth. Let's be clear. $12,000 Bitcoin's only cool if you got a whole bunch of money to be buying Bitcoin.
And by the way, if it gets to 12,000, if it gets to 12,000, we're all going to be scared, list probably to do it. That's just the way the markets work. But check this out. So if you see this was your high at 69,000. If you drop that straight line down, right, that's a low of 33,000. The difference here is and I can't draw it really, but $36,000 drop from this high to this low. There's something in technical analysis called a measured move, right? So a measured move basically means that you get the same move that you got previously, and that is where your next target would be. So again, if this was 36,000 down, then we're
going to zero. We're going negative. That's it. $36,000 down.
We're not. Check this out. So so 36,000 from this point to this point, right? And then so take your highest pivot here at 48,000. Subtract 36 and it gives you 12,000 right there. So that would be the equivalent of a measured move. What's interesting about 12,000 is if you take 80 to 85% of 69,000, guess what you get? about 12,000.
But let me ask something. I want, and this is I want to open this up to the whole panel. I'd love to hear what you guys think. Why do we consider? So we always hear, that history doesn't always repeat itself, but it rhymes. Okay, but we also have an evolving market in crypto. This is a newly evolving market that is changing. The amount of people, the type of money that's coming in, all of these things are changing. Why do you believe that we can continue to use technical analysis on more of a long-term? It sounds to me like what we're talking about is some long-term trends for a market that is long-term moving. So I understand the short-term being the mentality of, hey, it is what's the word I'm looking for? It is a self-fulfilling prophecy in the short term. But how do we turn that into a long-term answer for an evolving market? I'd love to hear what you guys hear your thoughts. Frankie, hit it.
All right. I will say, actually, Gareth, it's funny that you just brought that up with the 12,000 with the measured move. And then as you were saying that, I was like, I wonder what 85% from the top would be. Yeah. Magically, just there's the confluence. It's crazy how these numbers add up. It really is. It's really why I'm really interested in TA. It's so interesting. I just love sitting on the charts and just finding these weird areas of confluence. So as far as can you just repeat the question one more time?
I'm just saying, basically, like, we have an evolving market, and what we're talking about with TA, as this is just me personally how I see it as it's a self-fulfilling prophecy. So many people are saying that it's going to move to this number, so it'll move to this number. But long term, we have a market that's moving and changing so much. How do we keep looking back at history and saying, hey, this market is going to do or could do exactly what it was doing prior, when we're just a totally different landscape?
Right. So for me, like, I basically, that's why I always kind of stick, like you just said, history doesn't always repeat itself, but sometimes it rhymes. So with an evolving market like we are with Bitcoin, right, as it gets, every cycle that goes by, every day, every year that goes by, the market gets more and more mature. You have the diminished returns, the logarithmic regression, right? So this is kind of how the market can change over time. And kind of how what I will do, like, I always do take the history into consideration, and kind of like what I was showing you guys on the charts a little bit before, when you break that moving average and you come down, every cycle it gets a little bit and a little bit less and less volatile, right? So like the first move down from that moving average was 70%, next cycle it was 60%. And I would assume, right, as the market evolves, becomes less volatile, I would think in this cycle it would be a little bit less. So that's kind of what I take into consideration is, as the market matures, especially now with all the institutional money and stuff, you would think it would leave a little bit of a cushion in the market, again, making it a little less volatile. So that's kind of how I the history might repeat itself, but in this case might not be as severe. Another reason I don't think, it might not be as severe of a bear market, like I said, I'm very non-deterministic. I think it's either going to be the worst one we've ever seen or the best one we've ever seen. And the reason I would think that it is going to be one of the better ones that we see is because of the institutional money, because of the maturation of the market. And the other factor is that I talked to Ben about this on his live stream a lot. We didn't really see max euphoria in this cycle. So is that going to translate into not seeing max pain? So that's another reason why I kind of still lean towards the mid to low 20s. But, Gareth showing all of this confluence, with the lower targets, it makes you think, that's why, I don't think that's impossible. And I think the fact that, that measured move plus that 85% correction, I think a lot of people are like, no way can we go down 85% from the top. And, I say to those people, if you were in the previous bear markets, a lot of people thought 29 was going to be the bottom. They thought we would never see below 29. Yeah. In my head, I'm like, 85% down is much further than 29. So,
yeah.
So now that we're talking about history, right? We brought up the topic of history. On top of that, is this downward move, because of history, because of the charts that are showing us that this is why we need to come down to whether it's 12K, 20K, 25K, or is it because of the famous Black Swan Terra crash? Was causing this, or is that just the excuse, right, for people to point at, but the price was going to come down one way or another, and we just have this situation happening, and that's the excuse, right? That's the scapegoat. What do you guys think?
Yeah, I mean, I just jump in here. Is I really believe that the UST is just a result of the Federal Reserve pulling the liquidity out of the system, right? So, if in all fairness, if the Fed wasn't pulling back on liquidity, I actually think that in November we would have kept going higher, and we probably would have got that crazy blow off, crazy high, maybe at 100,000. But as soon as the Fed stopped printing money and started to suck it out of the system, it just took everything away. And what it does is it creates a situation where it's very easy to break a UST because people don't have the confidence anymore to just step up and throw endless money at it. And there isn't endless money at it anymore. And so I think it makes things vulnerable, like these different cryptocurrencies and different stocks and stuff like that. And you were mentioning before about the idea of the maturity and what makes it different. And what I would say is that longer term, like on-chain analysis means something longer term, and that's what people, when it was 65,000, I was like, it's going to 20. And man, did they make fun of me, like crazy stuff. But they kept on being like, on-chain analysis. And my response was that in markets, there's one thing that's always, or there's two things that are always the same: greed and fear. And it doesn't matter what market it is, greed and fear are the most powerful emotions, and they will cause panic like you wouldn't believe on the way down. And that's why even with on-chain analysis in like a year or 2 years when things calm down will mean something, just like fundamental analysis for stocks, right? So what's the earnings for this stock? What's this or that? Yeah, it means something, but if everyone's freaking out, then it doesn't, So it's just some interesting things like that to think about.
What's kind of your spin on it, Paul? CVO, what are your thoughts?
For the UST being like the reason or whatever?
Yeah,
you already know how I feel about it. Like the news for me, I didn't even know what like Luna did until today. I had to look into it because everybody's freaking out. So yeah, taking a level by level essentially, but we've had these targets, and as you come into them, like I said, when we came down to that macro range low and we just cut right through it, well, we're going lower. So to me, it's just kind of like the average person has to have a why. Like they have to have like that reason behind it. And then if you go across it, Gareth has been pointing at this bear flag breaking down for X amount of time, this and that. Like I said, looking at some of these volume targets to the downside. Frankie's been talking. I mean, it's not necessarily like a surprise at this point. And then you just when you. I think everybody needs that factor, that like catalyst to give them the reason why. Because like if the easy answer, even to me, if somebody asked me like, oh, what's going on with crypto, I'd be like, Luna crashed, and then they're just like, oh, okay, like that's literally an acceptable answer. And to me, I think it's quite technical across the board. It depends, whether or not whatever your strategy is. I was just saying, even if we go down to 20K, I mean that's it got lines up with a lot of things. And when you ask the question about TA and the market maturing, I mean, look at the stock market. I mean, obviously the stock market is X amount of years old, and there's still analysts every single day going to it and putting it in and using it. Yeah, and it's tools develop and get modern and upgrade over time and things of that nature. And but yeah, I mean, I think that Bitcoin and crypto is very technical across the board. And like I said, when you're living the day to day in the news right now, today, like you can look around and say, oh, it's even the COVID crash was a very technical drop, right? There was once again, credit to Magic Internet Money, and he covers this really well. This guy, the other trader in my group, he shorted from the 14K high down to the he didn't get it all the way to 3K, but there was a huge macro NPOC down at 3,300 or 3,900, whatever it was. And that's exactly where it comes down to. At the time, obviously, you get the Black Swan event news and all this and all that. 20 years from now, when you look back in the chart, depending on how you're looking at it, it can be easily pointed out, be like, oh, we had an NPOC here, we had an NPOC there, we filled it. If we dropped to 20K coming up, it's like, oh, we came down, we tapped that, untapped. Yearly pivot, you hit the 200-week moving average, which that's the only thing I don't think anybody brought up today, with that the 200-week moving average is right at 21K. So in that 2019 area, if we get there, it's going to make sense when you look back on it. Like, I mean? It just as, looking back at 3K in 2018 makes sense now because, you look, it just fell right to the 200-week moving. Living that out though, miserable, right? So let me spin something a little bit. We're hearing everyone talk bear,
bear. We got 3 TA experts in the chat, right, or on the stream right now, right? Miguel might call himself one as well, but you know, Miguel's just never wrong about anything. So maybe 4, maybe 4. No, all jokes aside, here's what I want to hear. Let's have a little fun with this. Tell me what the bullish, tell me a bullish scenario. I'd love to hear from each of you, maybe in a minute or two from each of you, just because, you know, for time's sake, give me like a 1 minute to 2 minute bull case scenario for all 3 of you. Let's have some fun. Let's tell some people in the chat, hey, guess what? The reality is things suck. The market has been down. Things don't look good. And I think everyone knows that. But what could be a bullish case scenario? Let's kick it off with you, Frankie. Let me hear what you got for a bullish case scenario.
Okay. So bullish case, you mean bullish like all-time high bullish, or are you talking just like bullish going up, not down?
I would assume it'd be just going up, not down.
Okay. Okay. So I can give you.
Yeah,
I can give you
a bullish case. I don't care how crazy bullish it is, but like just a bullish case instead of a bearish. Yeah, for sure.
Okay. So here's a bullish case that I could kind of see playing out. You know, not impossible. You know, we're coming down to this macro golden pocket, right? Let's say this macro golden pocket holds. We get the daily bullish divergence, right? You get the big daily bullish divergence. We wind up coming up. I think that it wouldn't be completely impossible. Now, I'll say this. I'll say my realistic target for a bounce, I would say, you know, if we get a nice little bounce here, I would say, you know, this high volume area right here, I think it's about 30. So I'm a little far from my screen here. About 31,755, right? So about like the 32, I could even see us maybe coming up to, you know, 32, 33K, right? Maybe we come up here, come up a little bit, and then, you know, maybe we work our way up closer to 33. But, you know, the bullish case, maybe we pop up here, we flip this to support, and we start working our way up back to the top of this resistance line that we've rejected off of now a couple of times. Here we rejected once, right? We rejected here. Maybe we work our way up. And now this is going to get us closer to the 40K range, 39, 40K range. And, you know, I don't think it's impossible, you know, maybe, you know, if we're given bullish cases, maybe we work our way, you know, back up to this area. But, you know, I will give you the bullish case. I'll give you that much. But I will say, if we do come up here and test this area, I'm going to be looking for some serious shorts at this area. But, you know, that brings us back up to about 39, 40K.
Okay.
And you think that will happen in like by the end of this year, or that's not even going to happen this year?
Yeah, I mean, what is this? I mean, if it plays out, you know, depending on how fast, I mean, maybe by the end of the month, you know, May 29th, May 30th. I mean, if it plays out something visually like this.
That was sooner than I thought.
Yeah, I mean, I will say this. I think if we're just talking about where I think we could possibly bottom out in general, I think we could bottom out. And now I don't think by bottoming out, I don't mean like we hit a bottom and then go straight back up into a bull run. That's not what I mean. But I just mean like find a bottom and start to maybe range. I would say, you know, possibly in the next 2 to 3 months.
Okay. Garrett, you want to take it away? You're on mute.
All right. Yeah. So number one, I am long Bitcoin. So at least very short term, I am bullish, right? I do think that technically we've hit a couple levels here where we at least should get a bounce. I could be wrong, but again, that's what the charts are telling me. But if you're looking for the longer bullish case where we could maybe make our way back to the all-time highs, there is a level I am watching here, and I want to show you guys this. So I think you already showed this there, Frankie, in terms of the downward shift here. This trend line here. So you have that trend line, and then take a look at this. If you connect these lows here, you basically get a point right there. So for me as a technician, if we were to retrace into this area here and then get above it, that would be something big for me. If you're looking for the bearish case, that shouldn't happen, right? That should not happen, that you get back above that level. If you do and you stay above it, then all of a sudden it's a whole new ball game, and you could start looking for further upside, maybe back to 65,000. So right now, again, the chart definitely has a bearish midterm angle, even though I think you're going to get a bounce here. But that would be the bull case to get above that area. So basically right now it looks like around 40,000 if we got back above 40.
That would be twisting things back around. What you got, Paul?
You got your screen?
Yeah, I just kicked it on.
All right. Let's do it.
Yeah, so we talk about these ranges and volume profiles and things of that nature. So those NPOCs, right, the naked points of control, major volume targets. We do have a couple of them to the downside, but as far as getting back to the upside, we talked about this scenario too, right? Like how we were looking to take out these lows, right? That would basically shoot everybody out of the market over the last 15 months, hit all the stop losses, yada yada yada, and get everybody overly bearish. So that could be a scenario, right, where this turns around, whatever. The case for me would be to re-enter the previous range that we were just in, that macro range overall, right, which comes in basically right at about 31,200. So we start climbing back and living in here, closing daily candles in here. And then, we have, the opportunity to start heading back. You got your point of control back up here, which is that yearly key level at 47,700. And then you got the range high. And one thing I do want to point out is that, doom and gloom wise, right, to the downside, you got those NPOCs, but we left a ton of NPOCs to the upside as we come back up. So this is, a lot of major targets when things do finally turn around. So I would say 31,200 for the upside for me. Start closing and holding above there. We can start looking back up, in my opinion, there. But yeah.
So, quick question for you guys. We've been talking about Bitcoin all night, right? The bullish, the bearish of Bitcoin. What about the altcoins? Most people don't even have a Bitcoin, right? They're all about the altcoins. So if we're talking about 85% down for Bitcoin, or low 20s, mid 20s, whatever that looks like, what does that look like for the altcoins? What are some of the altcoins you guys think? I don't know, maybe you can give me 2 altcoins each or something that you guys either think are going to hit the best, hit the hardest, or just in general, what are you guys thinking about the altcoins?
So I'll start with that one. So I mean, Bitcoin, even if you're not trading Bitcoin actively or buying it or whatever, Bitcoin is the lead. Nothing is. Somebody said it best, right? Ken, I think from KS Trading, is like nothing escapes Bitcoin's gravity. So you have to be paying attention to Bitcoin, obviously, and we all see the result of that, right? So that's why everybody focuses so much on Bitcoin, no matter what you have. I mean, everybody's probably got their own screen of just Bitcoin if you're trading or looking at altcoins. Otherwise. For me, though, I'll go ahead and look at Ethereum and Cardano real quick. And I just want to go first so I can pick Ethereum for you guys.
ETH gang. Let's go.
Let's go.
But yeah, so ETH came down to a macro range low here. This chart looks a little busy, I know, but sitting here and bullish bearish case, right? We came down, hit the last year's Q2 range low right here. Obviously, we got a nice wick off of it. These wicks tend to get, back tested is the only down part at the moment. We do have the point of control right above us as some support. But as far as that would go, if Bitcoin hits some of these lower levels and goes back to the all-time high, it's just like how we were looking at the S&P. In my opinion, I think everything's going to correlate to that same percentage drop across the board. So if Bitcoin's dropping it down to 20, you can imagine ETH's probably dropping it back down to 14-ish, and then we have a yearly S1 support comes in, which is a major high time frame pivot here at about 1,500. So that would be the downside. Otherwise, we start reclaiming this 2362 area, which is. I mean, at this point, like 20% away, but like you said, we can get this, relief rally and start, coming back out of this. But reclaim that range low, and then we'd head up from there. So that $2,400, let's just call it for ETH, would be where to be looking to reclaim for the upside. Cardano, on the other hand, Cardano was a big one that we're looking to hold on to 72 cents, and it was this 3-month level right here. We did not hold that, and then we were looking down towards this weekly, monthly area right here. And that's where we've met. So this is the other thing too, is that a lot of, just as Bitcoin has as well, but a lot of the altcoins have made it to macro areas of support on their charts. So, Cardano for one, can it go lower? That's always the case, right? We do have another major area down here. If you lose these areas, not a good sign. So you really want to be holding on to 34 cents. And once again, that's just all doom and gloomy, right? Not trying to look only down, because you are right. Everybody is super bearish right now. So, if we start coming out of this, what I'd be looking for is a reclaim of this 83 cents to the upside, start off with 72, and then I'd be looking higher here for Cardano. But this was a big area we were looking for some, possible DCA if you're, a diehard Cardano fan.
I've seen Cardano at a penny. I've seen Cardano at $3, and now we're back at what was that at, like 30 something cents? Like talking about bing bong, bing bong. Anybody else got any alts that they're looking at, or anything in particular that they are looking at as it relates to alts?
Anyone can go first. Frankie, you can go ahead.
Yeah, so I was actually, so on my stream we were talking we were talking targets for XRP, and I was saying
XRP army, put them up. Let's see it.
Put them up, guys. Right. We know they're out there. But yeah, we were talking, downside targets for XRP. I was saying, this level here, a lot of the targets, that we had on the lower end are getting hit a lot sooner than I thought they were going to get hit. So, I was saying, in the 30s for XRP was in the cards, right? Dumped right down. And then this area right here at about 29 cents is another strong level we're watching. I would not like Cardano. I would not like XRP to go below this price. Again, like we had these low prices. They felt so far away, so not that long ago. Even 20K, like 20K felt so far away, not that long ago. And here we are. I was actually talking about this on Bitcoin, not altcoin related, but let me pull up my other chart here. 20K was, we are not that far from 20K. We are about the same distance from 20K as we were right here on, May 5th, Cinco de Mayo. We were thinking, are we going to come down and test this golden pocket? It seems really far away. And here we are on May 12th. We've smashed through it. We've touched 25K. Didn't think that was going to happen. And now we are about the same distance from where we are now to, about 30% away from 20K. So, I think we can possibly, touching on what Gareth said, I do think, we've come down a lot. This bounce, it's got to be coming somewhat soon. I don't personally believe that, this little bounce is all we're going to get. I think we will come higher. But again, even after that, I mean, we are really close to 20K. So some of these lower targets for these altcoins, Gala is another one that we were looking at. 18 cents was holding very strong. I figured we would break this eventually in a bear market, but I mean, 6 cents. Did not think we were coming down to 6 cents that far.
So are we in a bear market?
Yeah, I said that on my stream.
Memo? Miguel didn't get the memo.
Like, you think there's any bulls still out there? Luna went to zero. Everything is dropping like a rock. And when I brought up the weekly blood diamond, which was, if I have a few seconds here just to bring this up, on the weekly chart for Bitcoin, we have the money flow index, right? Let me just get rid of this. Hacking the mainframe. But yeah,
smash the likes, guys. Smash the likes.
So for the weekly on Bitcoin here, we have the money flow index on Market Cipher B. For those of you who don't know, this basically shows the money flowing in and out of the asset, right? And historically, I know we've been touching on historical events a lot on this stream, but last time we came into the red, or historically every time we come into the red, we see about a 50% drop off. And when I brought this up, 2017, we were kind of moving sideways. Let me just zoom in a little bit here so you guys can see a little better. 2017, we came down a lot, right? We were moving sideways, and then you cross over into the red money flow waves here, and you wind up getting a big capitulation down. This was about a 50% move. And when I was bringing this up on, Ben's live stream in the morning for BlockchainCrusader, I was telling people, like, watch out for this money flow crossover into the red, because when this happens, typically we see a 50% correction. I always, back it up with, doesn't have to repeat itself, but, sometimes history at least rhymes, right? So we got this red blood diamond right as the money flow was crossing over. I was telling people, watch out, and I got absolutely murdered with hate. People were coming after me. No way, impossible. And here we are with the money flow crossover on the weekly. This was kind of, and this blood diamond as well. Not only do we have a blood diamond on the weekly for Bitcoin, we also had a blood diamond on the SPY, right? On the weekly, about the same time we saw this come up as well. And then I was actually on Evan Aldo, another great YouTuber's stream earlier today, and he was telling me, I'm not going to spend the time to pull it up, but on the total crypto market cap, we also had a blood diamond. I don't know if it was on the weekly or the 6th day, but on those high time frames, these blood diamonds will bring you down. So I don't know how I wound up in that conversation, but there you guys go.
Well, it's been an absolute bloodbath all the way around. I think people have been scared to get into just about anything unless they're doing their dollar cost averaging. Gareth, is there anything in particular that you are actually actively seeking out other than just your normal trading in Bitcoin? Is there anything you really got your eye on?
Yeah. So I have been nibbling a little bit, like this chart on Polkadot. I mean, this is like an awesome level. Now, again, we all know that no level is guaranteed to have a bounce. I mean, but if there's going to be one, I mean, look, it's basically a full round trip going all the way back to this consolidation right here. So, I mean, that's one that I'm definitely interested in, and I picked up a little bit. Polygon is another one here. Take a look at this level here, this pivot high here and this pivot low. You basically, you touched there, then you recaptured this top one right there. And then Solana, same thing, same thing. And again, this is, it makes sense. If Bitcoin's going to bounce, then these are going to bounce. But you could see these levels on Solana right here and here. And again, there's still a chance we go all the way down to this $20 level. But it's one of those things where, I think it's important for everyone to understand that as a trader, you never are going to know the lows. The only way we can mitigate, and try to get in at the best prices is dollar cost averaging, right? So even going back to my $12,000, potential low, I'm not going to be one of those people that's like, I'm not going to buy Bitcoin until it gets to 12,000, because you know what? I'll probably be sitting there with zero Bitcoin when it goes to 500,000. So what I'm going to do is I'm going to be, what's that?
I said facts.
Yeah. So what I like to do is I like to just play it really conservatively. Like basically I have my crypto account and I'll say, okay, I'm going to allocate 100,000 to Bitcoin and I'm going to start buying, let's say $5,000 or $10,000 at 20, let's say, or 21. And then every 3,000, I'm just going to put out another order of the same amount of money. I'm not even going to think about it. The second you let emotion get in there and like, oh, this is the great level, I'm going to put it all in here, you're going to be wrong. So just do it robotically, every 3,000 down. And then the idea is that if it goes lower, I'm going to dollar cost average. If not, at least I have some skin in the game when it does run up. And it kind of takes that kind of emotional side out of it. So I do want to say that because I don't want people to be like, oh, I'm never going to buy until 12 or even 20. Like none of us really know for sure. But the key is if you start with a small position, you get some skin in the game, but you don't over allocate.
Dude, so what Nick, you're actually muted, but I want to say, so at least my last question, I don't know if Nick has got a question for you guys or not, but where do you guys see this market going? Are we in a bear market, like a bear winter, where we're not coming out of this for multi-year, right, until 2024 when the next Bitcoin halving happens? Or do you guys think that we're going to eventually, way before that, come back and maybe have a somewhat of a decent rally, not just range in the 30s, but maybe try to make it somewhere towards the all-time highs before 2024? Anyone can take it. Just yes or no. Multi-year.
I'll jump in there. Can you guys hear me? I think I got disconnected for a second. Okay, cool.
You're good, Frankie.
Okay, so I have to say, so again, I try to be non-deterministic. But I think we're in a bear market, and I think a lot of people, I think we're going to be in a long bear winter. I think we're going to have to wait for the halving. I know Evan Aldo, again, I was on his stream a little earlier today.
You think we're going to have to wait till the halving?
Yeah. Generally, I mean, for all-time highs, I'll say that for all-time highs. Again, I was on Evan Aldo's stream earlier today, and he was saying he thinks we can come back up to about 50, into the 50s, maybe even the 60s in 2023. Now, I don't, I haven't really looked at that at all, but I mean, I think this is the bear market. I mean, I'm going to assume, again, non-deterministically, it's very important to me because I think people you can't hold on to this stuff, especially in a market like this. You have to be willing to pivot. If I think it's a bear market and I see things go bullish and we start breaking, important resistance, you have to flip around or you're just going to get wrecked. I mean, you can't just be holding on to one idea just because you're a perma bull or a perma bear. But I would say, yeah. I mean, until we see something really break in these cycles, I'm going to assume that history will repeat itself as it has in the past cycles. But if something changes, I will be the first person to reassess the new information and change my mind accordingly.
Real quick before the other guys jump in, I really love that you just said that, Frankie. There is so I'll tell you who one of the people that gets blasted the most, and it's just hate coming at the top, is Ben. BitBoy gets absolutely castrated sometimes for what people call, oh, he's flip-flopping. I thought you said this. I thought you said that. Well, the reality is, folks, for those of you that haven't been around since 2017, or Ben, who was buying Bitcoin back in like 2013, right? For those of you that haven't been around, these markets change. Gareth will tell you, CVO will tell you, Frankie will tell you, and Miguel will tell you that these markets do change no matter what market you're in. And if you can't look at a market and say, well, wait a minute, this is not the same over here as it is over here. I mean, think about like how could you not look at, let's just say, a defense contracting company in a time of war and think that their price of their stock is not going to be any different? You have to take those things into account. And that's the same thing with the crypto markets. You have to be able to look, you have to be able to say, you know what, I need to pivot what I'm thinking a little bit. I've been wrong before. I can be wrong again. And I'm really glad you said that, Frankie. Thank you for sharing that.
Of course, real quick, just to touch on that again, for the people watching, you want to be really careful who you follow, because you have to understand that it's in the best interest of the person on YouTube or whatever you're following to keep you coming back with that hoping that the price will come back up. And I say this on my stream a lot. My YouTube channel, sure, it's my job. I have to make money too, but I'm not looking out for my best interest. Like, we have a responsibility as YouTubers, I think, to not just, dangle the carrot in front of people's faces, telling them it's going up, it's going up, it's going up, because it does a disservice to them. And I think it's just wrong in general to do that. And again, if you're not willing to change your mind and someone's just telling you it's going up, the followers are going to get wrecked. And that's why everybody here, I think, is, you guys are going to say what you think, not what's going to be good for the YouTube.
Yeah, dude, I 100% agree with that. And I just want to say before everybody else jumps in again is, guys, we got 600 people watching. We've got like 200 likes. Smash up the likes, guys. All these guys are putting in tons of work, dedicating an hour of their life to come here and show you their TA, give different perspectives. Smash the likes for these guys and go follow them if you're not following Frankie Candles, CVO Crypto, or Gareth Soloway. Go shoot them a follow, guys. Now, CVO, Gareth, whichever one of you, take it away.
You got it, CVO. You can take it.
Yeah. What was it? What was the question again? I'm sorry.
Nick, what was your question?
Oh, what was my question?
Oh, no, that was my question. My bad. That was my question. The question was, are we in a long-term bear market now?
Oh yeah, sorry, I was reading through the comments. Yeah, so I'm in the camp, man. Like, where similar to how Frankie just said, you really do have to be able to adapt to these situations, right? So I was in the camp at the end of the year that we were going to see a larger end of the year time frame, 100K plus whatever. But at 60K on December 1, right? Like, when things changed, at least for my analysis, right? I was like, all right, well, that's not going to happen, right? So we had to pivot, and from there, it really is just that, right? And even like, looking at the charts as we come into them, you similar to weeks back when we were looking at the bear flag situation, right? When you're at the bottom of that channel, you still run the risk of it not breaking, right? And we could have ran it all the way back up to 49K top of the, and then one of those two is going to break. Same thing with the ranges that I look at with the, volume profiles and things of that nature. So for me, I'm actually in the camp that I do think that we will probably finish out this move. And I do see a little bit more downside possibly right now, right? We'll probably range it out. And that's the thing, right? That these long-term ranges are what chops everybody out. And I do see that we'll probably, with a move that we've already had with this, 30 or 40% down again, you don't just come back out of these 30. We've seen it, right? May of last year was one of them. December was another one. You drop to these levels and the distribution off that move is going to at least be the same period of time. So we probably have through the rest of this summer where we're probably going to range it out wherever we end up bottoming out at. And a range can be big though, right? The recent range that we were in from January till just recently was from essentially 33 all the way up to 48K. So, but by July time, August, I think that we'll probably start heading back up. And then, it's possible to me. I think we will actually get closer towards that, that previous high, sometimes towards the end of this year or Q1 of next year. But we'll see how it goes, and we'll be adapting as it goes to it. Not gonna, hang, like you said, not gonna hang the hat on that and just like die by the sword. But that is what I anticipate. And one of the biggest things is also just looking across the board at some of the sentiment and some of the, I do think that, everyone is really just all into the idea of like, we're going to only go down until 2024. I think that we all went through a bear market, previously, right? And then that was very different than what it is now even. And I just can't imagine that this won't be different too, in some regards. So we'll see how it goes. But either way,
Gareth,
I see it.
Gareth, as you answer this question to kind of finish out the evening, I want to ask you, is the sell in May and walk away any part of this, or are we just a victim of circumstance right now at the same time as all the other chaos is happening?
Yeah. So, I mean, just to answer that part first, I've never been a huge believer in the sell in May and go away. So for me, that was always a stock market thing where the institutional investors and the hedge fund guys would be like, all right, it's May, the kids are almost out of school. Let's sell, and then we're going to go to the Hamptons for the summer with the kids. And, so it's really, now that we have such a universal trading environment with, everyone trading from their phones and everything, I'm not a huge believer in that, but that I think that's where it came from, is like the New York, go to the Hamptons for the summer with your $1 billion type
Wait
thing.
a minute. I don't have a place in the Hamptons. Am I doing something wrong here? I got to figure that part out.
Yeah.
Shorting when you're supposed to be longing, and longing when you're supposed to be shorting.
But I will say this, like, I agree with the other guys, is that the true technicians are the ones that make the pivots. So it's not about changing your view and flip-flopping. It's like, literally, I say to all my traders is that every day you get a new candle. It's like, imagine if you had a puzzle in front of you and you got a new piece of that puzzle every day. And yesterday it looked like the puzzle was a dog. Today it's a cat. And tomorrow maybe it's a chicken, right? You don't know. And you have to be flexible as a trader to say, okay, this is new information. It now changes it from a bear flag into a more neutral flag. The probabilities are always shifting slightly. So I think that's such a good point to make. And then in terms of the bear market, I would say, like, right now I'm in the camp of 12 to 18 months from November. So that's matching basically the last few cycles. I'm a little concerned that, like, I've mimicked, or I've recognized that the .com collapse back in the early 2000s is very similar to what I think is going on now, which means honestly 90% of all cryptos probably be going to zero. The technology sector, the NASDAQ, didn't recover and make new highs for 15 years. I don't think that's going to happen because of, number one, the Fed is going to come out and start printing money again at some point in the future. So that helps the case for that not happening, as well as just the fact that it's a limited 21 million run on Bitcoin. So, I mean, I think that also helps it. But, I think investors, it's such a new asset. We have to be ready for anything. And remember, even in bear markets, there are still amazing trading opportunities. You can have 50% moves in cryptos in a bear market. I mean, that's a huge gain. You don't have to, if Polkadot's down at $8, you just need to move to $12 and you made 50% on your money. So, if you learn the charts and if you follow the charts and you're disciplined, you can make a lot of good money in a bear market too.
Dude, perfectly said. You're on mute, Nick.
Yep, I realize that. See, Miguel tells me before the stream, he says, listen, a real person has mute discipline. And I said, listen, 100%. That's why you're always talking on freaking mute and I'm not. And then I try it and my mute discipline sucks, okay? Not good at it. We're not doing the mute thing anymore. Crypto fam, what I started to say when I was on mute was that's the reason why we bring the guys that know the charts on here to help show us the different sides of the market, where things are going, where we think that we're going, what kind of pivots need to be made, and just the different ways to look at the market. We have 3 different people on the stream tonight that look at TA day in and day out, and yet guess what? They come up with a different analysis of where we could be going, where things are headed. And you need to take all that information in, as we're not giving financial advice. We're just saying, hey, this is what I've learned. This is what I see. And this is what could possibly, be lying ahead. Take that information and make a decision that's best for yourself. That's what we're here for. You can make money in a bear market. You can make money in a bull market. You can make money in any market, but it is all about what are you doing as it relates to your risk management for yourself and your portfolio. Too many times people take the word of somebody on YouTube, of somebody on TikTok, and they throw in way too much money that they probably can't afford to be losing. And then they want to point the finger at that person when they say it didn't go that way. Well, none of us are here for financial advice, and none of us also know which way these charts are headed. We're just here to give you our educational, wisdom as we've seen it happen over in years past. So we appreciate each and every one of you for being here. Gentlemen, CVO, Gareth, Frankie, thank you for coming on. This has been a great panel. Shoot, we had over 600 people in here, and for Debate Crypto, that is a slamming stream. We appreciate you guys for coming on. So we will definitely have you on again soon. And I think Miguel might be frozen right now because he has not moved at like not an inch. So I think I'm going to close out the stream by saying question everything, trust nothing, and until next time, hodl like it's hot. We will see you soon.